Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And as we continue guys with our mentoring series here on YouTube, welcome back to FXN Trading Group. Welcome to TMM24 Trading with Market Makers. And welcome to week 6 guys. We've covered so far in the last 5 weeks. We've covered directional bias. We've covered market structure. We've covered the different patterns for both London and New York session. So now what we're going to do in this particular week is how do we take all of those components that we've so far covered in 5 weeks and how do we combine them and what do we do with them? All right, so this week we're going to go ahead and start covering patterns and cycles together. How do we put all of the components from the first 5 weeks and we put them together from patterns and cycles? So let's go ahead, jump into the content, guys. If you're new to the channel, please make sure that you go back to the beginning so you don't get lost. You know what I'm talking about. Go ahead and just start from the FXN Mentoring 2024 playlist. My name is Mark. I've been trading since 2011, and I'm just here to show you my strategy and how I trade. Hopefully, it will help you in your own trading and helping you become a better trader. So without further ado, guys, let's go over to the whiteboard and let's get started. Okay, so here we are on the whiteboard. And of course, we have our market maker cycle, right, which is an M. It could have levels like this and then has a W here at the bottom. As soon as we have a confirmed W here or a confirmed peak formation low, okay, as soon as we have this, right, we should start to look for buy setups. Okay, so what do those buy setups look like? Well, if we're talking about, let's say, a type 1 pattern, right, if we're coming off of peak formation low and we're looking and it's a type 1 pattern that's going to happen, it'll look like this, right? You have your Asian session sets the initial high of the day and also sets your initial low of the day. We go like this, sideways, 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 and then boom, we come down. And then we make the type 1 and then we look for buys. Okay, remember type 1s break the bottom and break through the bottom of the Asian range in this example because we're looking for buys. Okay, so that's what the pattern will look like if we're looking for buy options on a type 1 after coming off of a peak formation low. Now, same scenario is if we're looking for a type 2 pattern, let's say. So same thing, Asian session is here. And of course, we have the sideways movement, right? And then we end up getting basically a W that is created at the bottom of the range. And then we go up. If we're looking for a type 3 pattern now, all right, here is the middle of the range. It can come in 2 different scenarios for a type 3 pattern. All right, so let's say this right here is the Asian box. And here we go. Here's the first one. Goes like this, comes down, and then goes up. Okay, that's the first one. Now, I want you guys to notice how this one basically came from the bottom. This is key. Okay, here's the other one. Again, I'm gonna draw out the Asian session. Here's the middle of the range. Okay, same thing. Asian session moves sideways, sideways, sideways. And then this one comes from the top. You see how this one, this type 3 here, comes from the top, goes to the middle, automatically gets rejected, and boom, it's done. So there's 2 different variations that we can get for type 3 patterns, specifically when we're looking for buy setups. These are the only 2 type 3 setups that you should expect when looking for buy setups. Either coming from the bottom at the beginning of the Asian range, and then going straight to the top, coming back down, gets stuck in the middle, and then takes off, or it literally just comes right from the top of the Asian range to the middle, gets rejected, and goes. So those 2 different variations. Now there is obviously the other pattern, which is a type 4, and for that specific pattern, it's essentially going to look like this. So again, here's the Asian session, here's the Asian session high. So what you're gonna get is basically sideways movement during Asia, and then you're gonna get the move coming early, starting off early in Asia, comes back down, tags the top of the Asian range, and then takes off. So that's what a type 4 pattern would look like. So these are all setups that we would look for on the buy side of things. On the sell side of things, if we're looking for sells, then obviously we'd just look the opposite, right? So let's go ahead and draw out this pattern here, right? So there's your market maker cycle. You have a confirmation here. You have this being now peak formation high. Okay, as soon as you have that confirmation, right, we have the EMAs that have crossed over, right? We moved, this move here is 1 times its own ADR. So now we have those confirmations. What do the sell setups look like when we're talking about these patterns? So same thing, Asian session, right? For type 1, so for type 1, Asian session goes sideways like this, and then obviously we get a pop-up, we get the M, and then it does this, right? It breaks above the Asian high, goes back up, and then comes back down again. That's the easy one, right? It's easy to identify. Now the type 2s, let's extend out the top of the range here. Same thing, sideways movement, and then you get the M like this going down. Very important to understand, guys, that a lot of the times on type 2 patterns, this apex here, so this part of the M, right, that creates the M like this, most of the time we want that to stay above the middle of the range. Very rarely would we want the type 2 pattern to essentially look like this, where this apex goes all the way to the bottom of the range. So please understand that. The only reason most of times when you look at patterns that are type 2s that go to the bottom of the range like this, typically if you look at the Asian range, how big was it? You're going to find that a lot of times it's 20 pips or less. This range is 20 pips or less. So because of that, a lot of times you'll find that you'll get something like this, where the apex goes down to the bottom of the range, and that's only because the candles are huge, right? You get huge candles that basically make up, the apex and stuff. So just keep that in mind, please. So what we want is we want the actual apex of the M, right? So here we go again. We want the apex to be like this and to preferably not go past the middle of the range. That would be the ideal scenario for a type 2 pattern. It's the same thing, by the way, going up. Okay, in buy setup, same thing. This is in general speak of type 2 patterns. All right, we want this to look like this. For type 3s, where you would have this time the middle of the range here, and you would have price action going across like this, coming from the top here to the bottom, bouncing off the middle, and then doing that. The other way is going to be very similar, obviously. This one just comes from the bottom, tags, and goes. So one of them is either going to come straight out of the bottom, tag the middle, and then go, or the normal one's going to be coming from the top and then hitting the bottom, coming back up to get rejected. Okay, notice how, guys, everything is a pattern like this. For type 4s, type 3s, they're the same thing. So type 4 patterns are going to be very similar in the sense that all we're looking for with these patterns specifically are going to be that they just simply break early. So it'll be like this, right? They break early, they come back and tag the bottom, and then swiftly move away. Okay, those are going to be the key points of the type 4. It's the same thing as all the other, same thing as a type 4 buy, essentially. But in this case, you're just looking for sells. It's just going to be like this. All right, so now that we're going to be looking for sell setups, right, coming off of this peak formation high up here, how long are we going to continue to look for sell setups on this? For me personally, as soon as I get to anywhere from 2.5 and up. Okay, so we basically moved 2.5 times its own ADR, and we're approaching, or we're at, a structure point, meaning if you look to the left, there's another structure point here. Okay, so if we're right here at this structure point, we're at 2.5, let's say, I am no longer interested in trading this particular pair until it creates a new peak formation. So at this point, I just stop looking at that specific pair and I go to a different pair that has just created a brand new peak formation. Your goal is to literally go and find only the pairs that have created a brand new peak formation. And those pairs that are nowhere near 2.5 times or higher its own ADR. Okay, so what does that mean? Essentially, it just means that you're looking for setups that are basically either at this stage here or at this stage here before they go back down again. Once they've come back down and you've already gotten, these two levels done with, I would highly recommend you to go look at another pair and go find one that is at this stage here, at stage one again. So we can break this down simply into 3 stages, right? So this is stage 1, this is stage 2, and this, of course, is stage 3. I want to stay below this stage. So if I'm looking for buy setups because I just came off of this peak formation, as soon as it passes and goes past stage 2, I'm looking for another setup or for another pair that's at stage 1. Okay, so these 2 stages, stage 1 and stage 2, are the optimal trading spaces. Okay, because at the end of the day, after stage 2 and you start to get into stage 3, we don't know how far they're going to go. You don't know if they're going to go 2.7 times. You don't know if they're going to go 2.9 times. You don't know if they're going to go 3.5 times. You don't know that. So because of that reason of the unknown, I'm only interested in working in this parameter because this parameter gives me the best possible options for me to get the best possible trade setups. Once we pass this stage, I'm just looking for another pair. What other pairs are literally at stage 1? You got 28 pairs, right? Trust me, there's going to be plenty of pairs to look for that are in one of these stages here. There's going to be plenty of pairs to search from. And so the problem that you're going to probably have as a retail trader, as a lot of traders at the very beginning, is that you're going to feel the need to trade up here. I've seen it happen over and over and over again because you think it's going to go to 4.5 or whatever the case may be. You're not a wizard. You're not a magician. Stay within the parameters that I tell you to, because I'm telling you, those are going to be the best trading conditions for you. Remember that we're looking for just very specific things. We're going to miss setups every day. There's going to be setups every day that we're going to miss. The faster that you can get over that fact, the better and faster you're going to get more consistency within your trading. One of the biggest problems that I had when I first started was just the fact that I loved just being in the market. And being in the market, wanting to always be in the market, cost me a lot. It was a very expensive lesson. So I'm telling you, learn from my mistakes. Learn from my mistakes. All right. And only look for the setups in the areas that I tell you to. I'm just trying to save you the agony and the pain of defeat. There's going to be some trade setups that happened here, and I'm sure they're going to be great setups. But for the best possible solution for you to be consistent over an extended period of time, the formula over the data is very simple. Stay within this framework here. Once it passes this, just go to a different pair. find this on a new pair. So just remember that. Stage 1, stage 2, stage 3. We always want to trade within stage 1 and stage 2. That's it. So now let's talk about how do we project out how far we're likely to go on a cycle. So we just made a brand new cycle right here, right? And so we're looking, our directional bias is to look for buys, right? We're looking for buys. How do we project out how far we could possibly go? So the way that I project this out is I simply take the very first day of the cycle, the ADR, okay, of that day, and I just times it times 3. So let's just say that the ADR here for the first day of the cycle is 73. So I simply just take 73 and I times it times 3. That gives me 219 pips. And I take out my measurement tool and I measure from the bottom 200 going up 219 pips. Okay. If the 219 pips lands me, let's say here, okay, that would be 3 times ADR. Ideally, what we like to do is we like to project out to a close area of structure. So let's say for me, if I'm looking for that specific number, if I'm looking for 219 and it's here, okay, I'm going to measure out to the closest point of structure, which is here. Okay, so what is here? If this is 3 times ADR, okay, what is this right here? Because that's a major point of structure. Okay, so let's say that this right here is probably around 2.7 times ADR. So for me, this area, this right here is the start of stage 3 because we're getting into that range of a full cycle and also we're at structure. So in an ideal scenario, I want the cycles to go to structure, not out to the middle of nowhere like here. And so you'll notice that in a lot of cycles, they like to go to structure. Why? Because there's our market maker orders sitting at structure points. So that's why I always project out to major structure points. Okay, so I wouldn't necessarily mark out this 3 times ADR. What I would actually do is if I want to mark out further, I would go from here and I'd actually mark up here. How far is it from here to get all the way up to here? Let's just say for this example, let's say that this right here is 4.2 times ADR. So then I would have the projections out of 2.7 and then I would have this one up here as 4.2. So what this allows me to do, guys, okay, is if once you get consistent enough, what this allows me to do is basically do this, is the fact that if price action comes up, right, and it gets to 2.7 times ADR. So if price action gets up here to 2.7 times ADR and we don't get a peak formation high like this, right, and we end up getting another buy, that tells me that there's a very good chance that we're going up to 4.2 times ADR because price is attracted to orders. Price is attracted to orders. And so the only place that orders are going to be is here and here because that's where buy and sell stop orders are. So if we get past this and we get a buy and we're out here in what I like to call in the middle of nowhere, that's why when you see me do the analysis videos, I say, you know, this pairs out in the middle of nowhere. That's literally what I'm talking about. It's out in the middle of nowhere. There's no structure for it to follow. There's no orders of structure for it to seek. So it essentially has pretty much no choice but to continue seeking the orders that are up here at 4.2 times ADR. So once you get consistent and good and you start to notice that, hey, we didn't stop here and create a peak formation at 2.7, we have a huge gap that we could still make a full cycle out of. It's just going to take 4.2 times ADR. There's a reason why they're not creating the peak formation here at 2.7 because they want the orders that are up here. And so if you see that behavior, This specific behavior where there is just a wide open space in the middle and there's no structure, know that it's very likely to be extended higher to the next point of structure as long as that point of structure still is able to complete a full cycle. If this same structure that was here, let's just say that this right here was not 4.2. Let's just say that this was not 4.2 times ADR. Let's say that up here was 6.2 times ADR. Obviously, if it breaks here, for them to go higher, they would need to create a peak formation and then reset it to go higher if that's what they want to do and search for orders up here. So understand that this only works as long as within the same structure of that cycle. If it's not, then that's when you can expect a peak formation high and then a reset to follow. That's why a lot of times you will see me say, I expect a reset to happen here. Because in order to go to those levels, you can't go on those levels from a single market maker cycle. You need multiple cycles to get to those areas. So now let me show you what this looks like on a chart. All right, guys. So very simply, now that we're on the charts, very simply with directional bias, guys, is as soon as we get a new peak formation low, right? As we get here on the 1 hour chart, the crossover happens right here, and then obviously we go straight up from there. Now, if we measure from the bottom of this all the way through the first time it gets a pullback, you see it's 273 pips. Okay, so now once we have the confirmation of a peak formation low, all we're doing is we're literally just looking for buys only. Okay, buys only, buys only, buys only, all the way up, all the way up. We're only looking for buys until we get to peak formation high. Now, let's go into replay mode real quick, and let's take a look specifically at this cycle. Okay, so we can break it down. If we take a look at this cycle, let's say, is averaging, I would say, about 100, close to about 130 pips per day, right? And if we go and we measure out from bottom to the very top, this is about 519 pips. So this cycle specifically is about 3.9 times ADR. I want you guys to look now that we have those figures out the way. I'm going to go to a 2 hour chart so you can see what I'm talking about. Okay. Now, notice how this cycle went up, number one, to the 800 EMA. Number two, where did it go up to end the cycle? Right? It went up to a major part of structure. Okay, it didn't go here. It went all the way to the top here. Theoretically, if I was projecting out this particular cycle, right, originally I would be looking for 390 pips, because that's, if you take 130 times it times 3, it would be 390. Okay, so if we go to 390 and we go up, now 390, 3 times ADR is pretty close to structure, which is not bad. Right? It's not bad at all. But do we get any kind of indication? Let's go down to the 1 hour time frame. Do we get any kind of indication of that we might be creating a peak formation here? The only thing that I can see is this spike down right here, right? And so for me, this is why after price action leaves the sector 2, I don't mess with it until it gives me a brand new peak formation. Once it breaks above that section, it's over 2.5. After that, I'm not messing with it anymore. So you can basically count from here down is going to be essentially, the section 1, section 2 of this specific cycle. So you can do all the buy setups basically within this range here. As soon as we break past this, we're no longer looking for buy setups. We're leaving this alone until it creates a new peak formation. Within this particular range, how many setups could there have been? If we just break down the vertical line here so we know when the crossover happened, which is there. So that's the section that we're working with. Let's go ahead and go back into replay mode here, how many setups are in this particular section if we go down to the 15-minute time frame? So right off the rip, right off the bat, here's a type 3 setup. Price comes out of the middle, goes to the top, comes back to the middle of the range, gets rejected at the 50, and then goes. Here's a continuation trade. Right here, goes. That's 2 setups on that day. The very next day, there are no setups here at all. You could take a reversal trade here, right here. This is a multi-session reversal, right? So that's 3. It's a reversal trade, right? So in the New York session, so that's still a valid trade. Let's go to the next day. Do we have any buy options? Well, I mean, technically, this right here would be a good type 2 pattern, right there, right? That would be a buy option right there. Anything in New York? No, nothing in New York. Let's go to the next day. Next day, we would have this as a buy option here. This right here. Going to the 50, that's a buy option, right? Anything in New York? There is. It's a bigger pattern because it's actually going to be part of this. That could be one right there, but obviously they came back down and re-grabbed orders under here, which is why you have this liquidity grab and a star pattern. So the real trade setup here is going to be this trade in New York, this leg here, okay, giving you a star pattern here and then a pullback. That would be the actual trade. Now, a lot of people are going to get into trades here like this, right? Because that's what they see. That's not a problem. Okay. Some people will even do this. We'll even see this as a multi-session trade. Again, not a problem as long as it meets your requirements for entry, which we'll talk about in another video. Okay. Other people, again, might see this, right? Get into that, and then they might get taken out. And if you get taken out and you see this right here, that right there is another pattern that you can trade as well. So there's multiple options here, all right, that you can definitely trade and have trading options for that day. Let's go to the next day. What do we get the next day? Next day we get a type 1 here, type 1 pattern, right? It's like this, goes up. There's another buy option there. What about the next day? Well, the next day you end up getting a trade out of the edge, which is essentially this right here, like that. You also get a reversal that's right here in the New York session. Let's keep going. Again, we're only looking for buy setups, right? This is an example right here of a good type 3 pattern that you would not trade because it's going against your directional bias. You end up getting a good multi-session reversal in New York session. So that's another one there. And then this would be the final one here. This is a very late trade, by the way. People could see this right here as a type 3 pattern, right? Comes from the top, like we just talked about, goes to the middle, gets rejected by the 50, and then goes right up, okay? And then this right here is obviously another one, but it's super late. And this is obviously going to be FOMC news right here, which is why price action pushed so high up. So those are pretty much all the trades available going in the directional bias in the London session, or if you're getting like reversal trades, essentially that would happen in the US session. So plenty of trades. My point is that there's plenty of trades within section 1 and within section 2 that don't require you to go above to section 3 is my point. Let's take a look at another one. Here's another cycle right here. Peak formation high is confirmed, and the crossover happens all the way down here. So the crossover happens all the way down here, and then basically from this area down over, you're essentially looking for sells. All right, so let's break down this cycle and let's see what setups you would have had. Now let's go back and let's go into replay mode real quick, and let's see what is the ADR for that cycle. So you can see this ADR is extremely higher than the previous. So we're like in the 160s essentially before we end up tanking into the 130s. Okay, so let's just say on this particular cycle, I'm going to say somewhere around the 150s because we did dip all the way into the 125s or so. So this cycle just happened to be 641 pips. So if we take 640 and divide it by, let's say 150, it gives us about 4.2 times ADR. Now, if we're going just off of the higher number here, you know, we're in the 160s, let's say, and we take 160 times 2.5, it gives us about 400 pips or so. Okay, so what we're looking for essentially is 400 pips. That's going to be the first, section essentially, or the first two sections of 2.5. And again, we're just using it because in real time, the ADR that we would be using for this cycle is this right here. Okay, we're basically in the 160s up here. That's why we're using it. All right, so let's just go ahead and then basically this section is section 1 and section 2 that we talk about. Are there any setups in this section that are for sells? Here's a type 1. That's a sell setup. This right here looks like a type 4 as a sell setup. Here's a trade out of the edge. Right here. That's a sell setup. And by the way, this is an ugly mess to begin with. As far as having the EMAs going cross price action and stuff like that. It's an ugly mess. Okay. So this is not the prettiest one, by the way, by any means necessary. Okay. But I just want to show you that even in nasty looking ugly cycles, or at least sections, you could still find setups. Here's another one right here. There's another sell. Here's another one right here. There's another type 2. Here's a beautiful type 3. Comes down, tags the middle, and then drops. It's a very nice one there. So you can see that there are setups in that directional bias. Okay, I mean, here's type 1 right there. Here's another type 3 right here. Nice one right there too. There are setups in that directional bias. Okay, even though this right here looks like complete and utter garbage. This section right here, guys, to me looks like complete garbage. But when you really look into it, there are setups there. It's up to you as a trader to determine, do I want to trade this kind of stuff? Okay, do I want to trade that kind of movement when you have price action going across like this? And the real easy way to know is when you go down to the 15-minute time frame, you'll see all of the EMAs like literally going straight through price. I mean, you could see right here, you could see where price is, I mean, just literally straight through price, right? And so when the EMAs, especially all of the EMAs are going straight through price, you're going to get sideways movement. The only good thing that comes out of this movement here, where you have all of the EMAs just moving sideways in this section, is that there will always be a breakout at the end of it. And the breakout just happened to be a type 2 over here that breaks that chain, that leads to another, trade out of the edge sell. If you're the type of trader that would probably get confused or frustrated with this kind of movement, it's okay. You don't have to trade it. Okay? You don't have to trade in this if you don't want to. Go look at another pair. It's completely fine. But I want you to understand and see that there are still setups within this sideways movement consolidation that, that looks like garbage on a 1 hour time frame. And so all this is, if you really think about it, guys, right? If this is the peak formation, this is just one level. Here's the second level, and then it's, working its way down. That's all it's doing. Okay, just like from a peak formation low here, you get one level, you get another level, and then you go up to another peak formation. That's it. That's all it is. Okay, but the point is your directional bias is going to play a huge part in how successful you are. So just understand, guys, that within every cycle, you're going to have setups, and you're going to have setups that go against your directional bias, and that's okay. We'll miss those, but we'll get the ones that meet our requirements, which is going in the directional bias. Now, let's talk about resets for a second, because this is something where you're going to run into. Resets are going to happen. They're part of, of trading. And so the losses that you're going to have should be because of resets, okay? And in the sense, in this particular example here, right, if you're looking for, let's say, buy setups because you're coming off of a peak formation low here, right, and you're expecting a higher move up, but then it automatically drops. If there was a pattern here for you to trade and you traded that pattern and that ended up being where the reset started, obviously that's where you're going to take the loss. But remember what I told you, peak formation resets, or resets in general, happen most likely at the 200. This one happened at the 200. This is where, you're aware of the possibilities. Okay. And now in this example here of a reset, did you have, or was there any kind of a possible scenario of a trade that was good, but you ended up, you would end up becoming, in a loss basically? If we were looking for specific for buys, okay, this here is the Asian session. This here would be the London session. So here's where you would end up losing. So you'd end up losing here as taking this as a type, let's say a type 2 trade out of the edge. So yeah, this would be like a type 2 trade. Okay, and so you'd have the first leg here. Second leg gave you a railroad track. That would obviously be good for an entry, and then boom, here you'd be taken out. So this would be an example of a trade where you would take a loss. Okay, but that's okay because these, are going to come. This is what's going to happen. All right, guys. So I hope that you guys enjoyed week 6 of the video. I hope it brought you some value as to putting all of the factors so far that we've covered together with concerns to patterns, daily bias, market structure, and how we go about finding patterns along with directional bias and putting them together. Next week, we're going to get into entry triggers, confirmations for each individual pattern of London and the US session. So make sure that you like the video, subscribe to the channel, share the content, guys. I hope you're enjoying the series as much as I'm enjoying making it for you. Till next week, have a good one. Take care of yourselves. God bless.